her money. She trusts somebody after I die and puts, quarter of the money with someone, and they steal it. They run away and steal it all. You still have 75%. You can recover from that. It doesn't take down the ship. Same thing with trading. 25% position. The chances of a stock going to zero, that quickly without you being able to stop out and mitigate the loss is near zero. So, but the chances of it going down and gapping 15%, 20%, even 50%, can happen. Can happen. So let's just say it gaps down 50%. Before you can get out. That's huge. That's about as big as it might get. It's 12.5%. It's a giant loss, but you can recover from that. You still have the majority of your capital, so you have to position size. And again, especially overnight, like you don't ever want to put all your money overnight into something that you have full exposure, because now you're at a true really big devastating risk, potential
Mark,
devastating risk.
Weissman is with 2 S's. Just remember that.
What's that?
When you're dividing up the wealth, Weissman's 2 S's.
Gotcha.
Question is being asked about AMLX here, actually.
And I just want to point out here, so far, we're turning up here. This is acting, and maybe what we do here is we just trade this stock. Let's trade this stock based on the 5-minute. As an exercise. Let's trade this and act as these are the dailies. So as long as this is acting right, if it gets extended and it starts meeting sell rules, we'll sell it. If we get violations, we'll reduce it or sell it. I mean, I only bought 1,000 shares. But we can certainly, I want to have some type of activity here, and I think we could play this intraday as an exercise here. So that's what I'm going to do. I'm going to keep watching this intraday, and we'll play this trade that way, or at least maybe half of it. But go ahead. I'm sorry. Go ahead, Bob.
You actually brought up a good question that somebody was asking if both Marks could share. Do you have retirement accounts? Do you trade those in a different strategy? For one question being asked, if you have other assets outside of stocks as well. People are just asking like how you diversify.
Yeah. So I do not have all my money in the market, nowhere near anymore, because I don't need to. And I have a retirement account just simply because it allows a certain amount of my income, of a 401k, a certain amount of income to come out and to be tax deferred, but it just goes into fixed income. I don't trade any retirement accounts. I do have an account from my daughter that is an S&P 500 that I trade basically off the longer term trend model, our own models. But my own money, it's pretty much up until, I don't know, decade ago or so, like all my entire wealth was in the stock market, and I would trade. In the last 10 years or so, I've moved that back, and it changes. Like if right now I'm trading a small amount of money, but if the market starts doing really well, I'll trade one of my bigger accounts, or I'll add money to my account and I'll trade more money. But yeah, I don't have retirement accounts. Like I'm trading them differently, multiple accounts. I have one strategy, one approach, and that's it. And I've been doing that for the last 30 years. It's been just one strategy, one approach. How about you, Mark?
Actually pretty similar in terms of, I would say 100% of my net worth was pretty much on the line until the last few years. But in regards to other accounts, I have a really tiny 401k type thing, but I don't really trade it at all. And then as far as other stock accounts, I would never do anything differently. If or when like I have one or two longer term positions, I might trade those off the weekly or something just for a bigger move, but I'm getting in the exact same way. And then like I've had some money in Bitcoin for a number of years, that type of thing, but nothing. 90% of my net worth is basically in our trading accounts.
Monster Beverage, of course, is breaking out here. This little handle, we already bought some of this. You can see here on 11:15 as it started turning up from this little pullback buy over here. And then it stayed tight. And was acting fine the last couple of days. Love the close on Thursday, Friday, came out here above that pivot. Once again, you can do the same type of analysis where if you just draw a line right across here, you can see Friday it came out, it cleared pretty much everything. It only traded above that level on one day. And even if you go back all the way here, oops, sorry about that. It came back up to this high right here. So that's really clearing out all the supply. Now it's following through. So this is acting great. This is exactly what you want to see. Only up about 2 1/3% from our purchase. Back to ALNY.
I was going to mention that Mark Monster on the 5-minute intraday because it did have a nice mini cup with handle there about 2 bars ago.
Right here.
Yep.
And you see how even on the 5-minute, you see how this is coming from a little cheat area right here. You see, it doesn't matter the time frame. Every time frame is going to go through these same iterations: the VC, the volatility contraction, the low cheat, the handle. It doesn't matter the time frame because this is the law of supply and demand on display. It is timeless. It doesn't know any time frame, and it will work for the end till the end of time. Until gravity, stops working. It's the same thing. It's like the law of gravity. It's not the cause; it's the effect. These are the footprints of supply and demand dynamics. So it's not like because this is doing this, people are acting and it does it, or lack of it, because it gets tight. Everybody comes in and buys it and the stock takes off. No, the stock takes off because it's tight. It's completely the opposite. That's really important to understand. So you have confidence in this. But of course, there's a skill involved in being able to interpret normal from abnormal price action and to manage the risk in relation to reward. That's what it's all about. It's all about forming reference points and putting yourself in a position to get lucky, to be in the right place at the right time, and then managing the opposite side of that equation. Because with that equation, it is the downside. There's the upside, but there's also the potential of the downside. And now you have to manage that downside in relation to that upside. And the upside sort of acts as your pace car. That wherever that upside is, you've got to stay a certain distance behind it. Think of it like a pace car. And after a while, that pace car becomes very consistent. It travels at a speed that is in a range that you pretty much can count on, and and certainly when it doesn't, it gives you a lot of valuable information. That pace car normally, goes at 55 miles an hour, and all of a sudden it comes to a complete stop and it's going 5 miles an hour. Something's wrong, right? So again, just like another metaphor, on a racetrack, they have the pace car in the beginning of the race. So just think of the gain as your pace car, the potential reward, and managing that risk in relation.
Curriculum questions can be asked via email. If you guys want to post like on the spot questions, you can definitely do that here in the chat box. Mark UTHR question being asked: it's not 100% move for it to qualify as a power play.
Yeah.
Would this just be considered too extended of a setup to be trading?
I like the little setup here. Let's bring it up on a Market Smith here, UT, and let's see what we got as far as RS is 96. Biotech, I see. Yeah, it's not even close to enough to be a power play. Let me look at the weekly. So pretty big base here. So the first thing I want to do is kind of put it into perspective. There's a couple things I want to look at. First of all, it's a big base. So this is more of a breakaway move. So that's good. This isn't a move that has been running up, has accelerated, and this is a blow-off stage. This is a breakaway move. And if you look at here, you see this line, this is the S&P 500. So you can see that it's outperforming. And we know that just because of the relative strength line. See, the RS line is moving up here. And it was moving up here. Since we topped here, this stock has been outperforming. So it's stair-stepping its way higher while the market is stair-stepping its way down. And it's now moved into an uptrend. It's in a stage 2 uptrend. Now, I don't know if it's a confirmed how long we got here. Yeah, so it is, it's pretty much a confirmed stage up to uptrend. It is a confirmed. We're above the 200-day. So the thing is, it's a short base. We call this a short stroke when it doesn't have the power. And it definitely is more failure prone. Sometimes what will happen is, they'll break out, then they'll come back in. They might undercut the lows and rebase, but it might not. It might go here. So you gotta decide, what are you going to risk here? So this is coming out. If you bought it right here, you let it come all the way down to the low of this little pullback. You're only talking about 6%. So I think this would be, and if you're just holding it maybe, below this little pivot right here, you're talking about 3 or 4%. So this looks like a good risk reward play. I could add this definitely to my list here. Let me see here, UTHR. Keep an eye on that. I think it's buyable right here. I think you can buy it.
Yeah. Maybe he is.
Now, here's a perfect example of another look at sort of progressive exposure. So I bought ALNY. Now, this one here is starting to come out here. Now, I might take another position. Maybe I buy this one. A couple come out today, but let's just say ALNY is underwater. I buy this one here. It starts pulling back. I get underwater here. I'm not going to keep buying stocks. Now ADM maybe comes out, or instead of buying, my original position size, maybe I was going to buy X here. I was going to buy $500,000 worth of stock. I might only buy 250 now, or maybe even 100,000, and take a smaller position. I'm going to bend until I get that traction. I'm not going to just keep piling in money and putting good money after bad. I want to see some traction. Always looking for traction and pyramiding on the backs of success. This is where you get into a lot of trouble if you start trying to speculate as to what might happen, as opposed to just waiting to see when it happens. But what happens is that the FOMO, you're worried that this one's going to take off, and you're going to miss it, so you buy it, and the fear of missing out comes in. You got to get away from that. You got to get away from those emotions. I have a much bigger fear of losing my money than I have a fear of missing out. So I make sure that I cover my downside. This is acting really good here. I like the way this is acting. And I think now that it came all the way back down to this low, and I'm getting real microscopic here. Again, I wouldn't recommend that you trade with these really tight stops like this most of the time. In this particular market, or if you were underwater, or you're just starting to get in the market and you want to just get your toe in there, maybe you can come in and really take some really low risk, because you just don't want to get yourself at a loss yet. But you're going to choke the trades off. You're going to choke off trades that may not stop you out and go on to make bigger moves. So just realize that there's a trade-off. When you get real tight on the stops, you're going to be stopped out a lot more often. Now, if you got a reentry mechanism, that's fine, but it may not reset in a manner that you're going to be able to buy it from a low risk entry point again. So let's see here. So today's low is 94.17, 94.11. The previous day.
Attention, an alert target has
you
been
can see
reached.
that's starting to come out here on ADM. I'm definitely I'm gonna buy some of this here. So I just bought. Let's see here. So I just bought 5,000 shares. So I went a little bigger on this one. So that's about a $500,000 position. So with this one here, now let's just say that position size is huge. That 500,000, whatever the number may be for you, it might be $1 million, it might be 50,000. But let's just say this is uncomfortable for me. This position as far as taking a lot of risk, and I'm just trying to get it right. So I'm up right now. I'm up about what do you got here? I'm up about. I was up about 2,500. Now I'm up 1,600. I could finance right now, as it's moving here. If I take a really big position, I want to take it down to 1,000 shares. If I sell off 4,000 shares of it, I'm going to finance a lot of my risk. So I'm going to sell right now. Boom. I'll go. Oh, wait, hold on. What did I just do here? Okay, I hit the wrong button. I didn't sell enough.
quarter bill.
All right, so I sold 4,000 shares out of the 5,000. Now, again, I'm doing all this really fast here in shorter term trading just to illustrate points. This is way too quick. I just want to let you know for swing trading. But now I've got 1,000 shares on, right? I got in at my average price is 95.81. I took a little bit off. I put a little bit of profit in there. So now I've financed some of the downside. You know, if this comes in on me now, I put a little money in the bank. You could mess around with these numbers however you want. You know, if this stock were to take off here over the next couple of days, even let's say a few days, this stock, it holds up today. You hold it for a couple of days. You got a, you know, pretty good sized position. And now you're up 7-8%. Your stop is at 5, 6, 7, 8% down here. Well, you sell off half of that position. You've free rolled it. But I'm trying to free roll it right now intraday. Right. I'm trying, and sometimes what I'll do is I'll take a bigger position intraday. And if I can get that stock to move, then I finance my overnight position. I take that overnight risk and I de-risk the trade. Always trying to de-risk the trade. I just want to get myself in a position to be have the upside with the least amount of downside, or maybe even no downside at all. And that's the key. The key is that downside. If you constantly keep choking off that downside and you expose yourself to the upside, and don't choke off the upside too much, you allow that upside to come to fruition, you have an edge. You can't help but win over time. It's like the casino. You know, a casino operates on a 0.5 to 2% edge in any one of the games, like, you know, in craps or blackjack. The edge is just a 1 or 2%. All right, but you're rolling that over. The casinos build these palaces based on that because the odds are with them over that distribution curve. Your odds can, in this particular business, your odds can be shifted huge in your favor. I mean, just monumental. You know, statistically speaking, if your odds were, you know, you had a 10% or 20% edge versus a 1 or 2% edge like the casino, it's an astronomical edge. And you can create that. But you've got to get off of the worrying about the upside and manage the downside. That's why what I'm doing here is just to try to illustrate the concepts of risk first, of covering your ass. All right. That's the main thing, is the concept. And then, okay, I get some profits. And now let's just say ALNY ADMs start taking off here. And here's a perfect example. I'm down $1,000 on ALNY. So I've actually cushioned that a bit. With taking the ADM profit, I cushioned that a little bit. So at the end of the day here, if we were to close out right now, I'd be flat. And I have one stock that is not up really at all, and another one that's down. I'd still be flat here. I wouldn't lose much money. I took a little off the table. I cushioned a bit. Same thing with ALNY. It runs up here. Maybe I take a little bit off, and now I put myself, I've got that option. See, you create those options. Once you get at a profit, it creates options for you to start de-risking and free rolling. Now, if the market, and you might want to even, you know, explain, Mark, how you do this, but I know a lot of it's the same, obviously. In a really good market, let's just say everything starts ripping. We had a question before, do you go right to that full size position? So all this, jockeying and covering our downside so carefully, we're not going to do this, because now we want to put those big positions on and give the stock, we want to keep our position, sizing. But that's after you've got some traction and you've got some evidence that the market's moving in your direction. Right now, again, we're in a bear market. And look here, the market's down here, right? NASDAQ's down 1%. You see, I'm not looking at the market. The market's hitting new lows here. And I'm over here buying breakouts. I'm not looking, it's not concerning me, and again, if the market was down 1,000 points today, if stocks were breaking out, that would even make me more interested in them, because that means they're performing amazingly in a down market. So I'm looking at the stocks and I'm gauging it. I put my toe in here on a few names. If they start working, I'm trusting the stocks. I don't care what the indexes are doing. I'll look at the indexes at the end of the day, and I'll take that in relation to how the stocks acted and see if there's distribution. Now, if we start getting distribution days on the NASDAQ and the NYSE, fine. But what are the stocks doing? If if I'm getting a bunch of stocks that broke out and there's pivot failures and I'm getting distribution, okay, well, that makes sense. Everything's not working, and I'll bend to that, but I'm not going to let the Dow 30 stocks dictate what I do with my trading when the individual stocks are the real market. So again, so ALNY is still acting fine. See, it's just building a little base here intraday. Still, if this was a daily, it would not have given me any indication here that I'm in trouble or I need to sell. There's any violations. It's still acting perfectly fine. ADM, let's see, intraday. So we've broken out. You got a little cup with handle here, a little V-shaped. Now you're pulling back, right? This is your first pullback. This is where the rubber meets the road. If this was a daily, we don't want to see this crashing in here now and giving all the gain back. And so we got to watch if we get any supportive action here. This would be, if you're watching a daily, this is right where, you might come back into the breakout. That's perfectly natural. And that's where we want to see some support. So it started to squat. You got an outside day here. This also, now that we, well, actually it's not, I was right to the penny, wasn't it? Let's see, 17. Yeah, we didn't get an outside day. So I think at this point, now that we took out the highs, if you engulf the previous day and we went outside, now I think the previous day's low would be a good short-term stop if you were to be short-term oriented, because now you'd be putting in the megaphone. Now you're widening in volatility, the opposite of what you want to see. Volatility is two directions, remember? So we want to see alpha. We want this stock to go up and have minimum downside. Alpha with low standard deviation. So again, always managing that risk reward. I'm sorry, Mark, I said that I was going to let you comment on that.
Well, yeah, what was the question again? Sorry.
I know. I'm sorry. I think it was.
And just in relation to how aggressive you're going to be right now. I think is
the position sizing and aggression.
Yeah, I mean, look, I'm just trying to get, we're trying to get our feet under us before we, are really getting aggressive. That's really just how I think about it. I took a tiny bit of this ADM. I'm trading at sizes right now, just very small, just to keep a pulse. But your example before, even if you're a shorter term trader, maybe you buy the ALNY and it just blasts off. Then I'm looking. Anytime I get positive feedback, I want to take that back and then say, okay, how many other setups do I have? How else is the trading going elsewhere? Lately, the positive feedback has only lasted a very short period of time. And anytime you've used it to sort of get more aggressive, it's been just constant jockeying for position. So, it won't change for me until, you get some real traction.
That PepsiCo, is coming out here. Came out pretty nicely so far. So again, as we said, this is pretty tight here. I would like to see it tighten up a bit more, but this is coming out. Now, again, you start seeing, PepsiCo, these are defensive names. We've seen a lot of these defensive names in food stocks and some of the beverage names and so forth. It's not the best sign when you get stocks like PepsiCo that are leading. But who knows? Maybe the growth stocks led for so long. Maybe we're getting the old stocks that have been beat up for decades are going to have their day here for a while. Who knows? Maybe value's coming back in. But the charts, you're going to see it in the charts, and you're going to see it in the stocks that are in uptrends. It'll all show up in the charts of the individual names, and that's where you'll focus on what's showing up and what's setting up.
Mark, on MEC, Mary, Edward, Charlie, basically question being asked if a power play can happen from a stock just running up like this as opposed to like a big gap up.
Did you say NEC?
Mary, Edward, Charlie.
Yeah.
And then two, so can a stock be a power play even if it doesn't gap up 100, that makes that big move?
It can't be a power play unless it goes up 100% in within 8 weeks or less. So it has to go up 100%. I mean, if you want to call it, if it's 95, 93%, that's close enough. But about a double in 8 weeks or less. So if we measure from this low right here, this is just to pretty much hits 100%, 97, 98%. Problem here is that you've got a gigantic decline, and you're not even turned up in the 200-day at all. So it's just trying to flatten out here. So you are going, this, and it's a lower price stock. So I would be careful with this. This is one that could very easily come in because you're going counter trend now. I would want to see the 200-day, and it's such a steep, look at the 200-day, how steep it is. And you've got a lot of supply here, big giant decline. Where did this go down here? This came off, 75%. So yeah, be careful with this one. This isn't the best looking power play.
Damien's asking if we were in a bull market and market's trading well, is there any stock he would take a full position on? And I'm not sure if you mean his entire portfolio or if you mean a full position. He takes full positions all the time. But
yeah, I wouldn't, if you say a full position, meaning the whole portfolio, I wouldn't take a full position overnight. Certainly not with the amount of wealth that I've acquired. That's taken me 40 years. But, again, let's just say, even if you were, I first started out, I had a couple $1,000. The account that I grew that ended up being my track record and that Jack Swagger audited, started with $32,382. So that, if I lost all that, that would have been, at the time, it would have been my entire account. However, I could have went and worked and saved money and replaced that, so you got to think of it in also dollar terms. If you've amassed tens of millions or hundreds of millions of dollars, you can't replace that overnight. That took me a lifetime to get to where I am now. So that has to be taken into consideration. See here. So I'm going to go back to the ALNY. So again, coming off a bit here, but still acting relatively normal. This is sort of where the rubber needs to meet the road now. Still acting pretty normal. It's the market's down here. We're definitely going you're seeing there's not a lot of green. There's not many stocks up big. So it's definitely a market today that's not getting much traction. Unfortunately, we're getting a quiet day. We're not getting much moving on the upside, but this could change. Sometimes you get these breakouts. The market's weak in the morning. You get breakouts. They hold, they squat, they don't stop you out. And then at the end of the day, the market comes on. You get a rally, and all of a sudden, the stocks that broke out take out the highs, move higher, get good closes, and other stocks that were setting up break out on the heels of it. And at that point, then I might take another position or two. Again, coming back into the market here, I'm willing to take 5 or 10 positions, but they're small. If I take 5% positions, I've got 25% exposure. And that would be sort of my first toe in the water, is usually about 25% or so. And then if things work, I'll usually move up to 50. And then from there, I'll make a decision whether I want to go jump right to, fully invested. If I've got the ideas that are available, or maybe 75, I start trying to get myself to a more aggressive posture. So we're getting a little support here, pulling back to where the stock moved to the pivot. So far, so good on ADM. ALNY is coming in a bit here. This is now, I'm at my biggest loss in the stock right now. So that certainly gets my attention as far as where I am. It's hitting the lowest level since I bought it. It was holding above my purchase price, and now it's moved below my purchase price coming in here. So now, if this was a daily chart, yeah, this is getting a little bit ominous. You're getting that first pullback. But here, if this was a daily chart, this would be already went through 1 and 2 natural reactions. So this would probably be anywhere between an 8 and a 20% move. So you might have already taken some off. Again, like when we compress this, you have to realize that you're compressing the time frame, and now you've got to trade this in really small increments now. So what would seem like, oh, I'm not going to take the profit here. It's only, I'm up $1,000 or whatever, a couple of thousand, it's 1 or 2%. Yeah, but you're trading that shorter term time frame. That could be, on the chart, that could be the same as if it was up 15 or 20% on a daily.
ADP, Mark.
ADP. Gotta get a tissue. My nose is stuffy. Let me see here. Yeah, I saw this one over the over the weekend on screening. Wedging up a little bit here. Again, I think this is sort of a kind of a defensive type name. ADP. It's acting okay. I think I wouldn't rank this aces or kings, but it is wedging up a little bit here. But on Friday is where if you're going to be buying this, Friday was the day. Now you're starting to follow through here, so it's buyable.
Canal question being asked if Marquis is not holding overnight positions because of the hard penny environment that we're in, but would you hold overnight positions during the easy dollar bull market environments?
Oh, absolutely. I'm holding overnight positions now at times. I'm just not holding large positions. So I am holding overnight positions during this market. And Mark Ritchie is also. But we're not taking any big risk, and I'm trying to finance my risk if I can. Like I said, if a stock runs up and I buy it and it runs up 7 or 8%, I got a big day. Sometimes buy some of these names and they pop real big. I will maybe take some off. Often I'm taking some off and financing some of the risk overnight, depending on the situation. But I am holding overnight. Just I'm not willing to hold any large positions overnight right now.
Question being asked, when you take a swing core position and you trade around it on a shorter term basis, do you consider all that activity to be a single trade, or would you consider the short term trading for one strategy and the swing trading for a separate strategy for your trading results?
It's really how you want to calculate it. I mean, if I were to pair them into a trade and I bought a quarter position, then move it to a half, then move it to a full, then moved it back to a half and traded around the position, I would consider that one trade and sort of net it all out. But if I'm in and out short term and I've liquidated the whole trade and then moved in again, I would consider those separate trades. But that's really, sort of how you want your accounting. We do have on our own software, one thing that's unique about the software that we have with our trading logger is that you can go in there and put quarter, half position, put all different position sizes, and it will net it all out as far as the average cost basis and everything. It's kind of unique in that way. And you can also decide which shares you're disposing of when you sell and match them to which pieces that you bought.
When you have
So LNY has now come down to where it's almost flat on the day here. And again, not super ominous, but this is definitely on a daily chart. Again, you're definitely correcting now. And this is not natural now. See, this is not natural. Now let's look at it as if it was a daily. 1, 2, 3, we got 4 lower lows, right? So now we're coming back. Here's the breakout. So you're getting a full retracement now. So if you didn't already sell into this, let's just say this was a 20% gain. Well, I'm not going to let this come all the way back down and put me at a loss. But I bought it higher here. So I'm already at a loss. But I'm just saying if you were buying it, out of this base, if you will, and now you've got the lower lows and your natural reaction did not hold up. So again, this would be getting some violations now.
Question: if you have your exposure, good market conditions, you're fully exposed, what's the maximum portfolio risk you would take if all your trades got stopped out? What's the most amount of risk you're comfortable taking?
I'll let you. You haven't said much, Mark, so I'll let you talk to that one.
So are they asking, assuming you're fully invested? Is that the question, Bob?
Right.
Well, I'll take as much as 4 or 5%, but that's going to only be assuming I have profits. So I'm going to be leaning on either booked, or I'm certainly not going to let myself go into a 5% hole off the hop. So meaning, let's say I'm up double digits or more, ideally I'm willing to carry a little more risk versus a situation like now where I'm willing to carry very little.
You'd have to repeat the question for me, Bob, if you want me to
If you're
answer it.
fully
Yeah.
invested, market's good, you're fully invested, what's the maximum portfolio risk you're willing to take if you were to get stopped out on every position?
Right. So I wasn't even listening to Mark Ritchie's answer. So forgive me if I repeat what he said. So I don't look at it that way, although I am cognizant of, I know what my maximum drawdown is if I were to get stopped out of everything, but I take it stock by stock, and I'm treating each stock individually. So I've already come up, that's sort of built by default into the plan. So if I manage each individual stock correctly, and I'm constantly, managing risk in relation to reward, then that sort of works itself out. But I am, I certainly am cognizant of the number that where I am as far as the gain, and if they all stop me out, what I would lose. This is something that it's a great question. It's a great question, and you definitely want to minimize that drawdown, but you have to be careful that you don't just come up with these hard numbers and try to make these hard and fast rules, because that's where you start ignoring the individual parts, and manage each stock individually. And if you make each individual stock a good risk reward decision, your overall your whole portfolio will be a good risk reward proposition. So now here again, we're coming off here. We're going to now 1, 2, 3, 4, 5 lower lows. So if this was a daily chart, I probably just reduce here. We're getting near the low here of the day here. We can call this the weekly low. Maybe if this was the daily, this would be the weekly. I'm just going to reduce. I'm going to sell. So I just sold half. Again, that puts me in a position if it goes higher. So like I said, good thing I held half. If it goes lower, good thing I sold half. So I'm selling half of it here, taking a little a loss on that half position. And let's see if we can hold this low here today. But this is, again, in this market, this is exactly what I would expect. This is what I said right in the beginning, that we break out and we come back in, and they just don't follow through. This is happening over and over and over. So I would have to be a fool to just jump in here really big size and go buy a stock that's doing exactly what has been happening over and over and over, and it hasn't been working until it starts working, until we see that there's an appetite for stocks breaking out of bases, coming through cheats, low cheats, handles, and these stocks are starting to follow through. Until we see that happening, there's just toes in the water here. For me, this is very, very small trading. This is microscopic trading for me to buy these position sizes. So I'm not getting myself. For someone else, if they take a $3,000, $5,000, $10,000 loss, it's huge. When I first started, that would have been, I would have been jumping out a window if I lost $10,000 in a day. So again, it's relative. This risk is all relative to your own situation. But the charts, the percentages, level that playing field, and of course we'll make those decisions to each of your own instances. ADM, it's not following through here. DGII is up 4% now, so that one's moving up. That's acting pretty good. Even TH is coming back a bit here now, about 4%. So that's squatting a little bit. That's coming into a little bit of supply. Normal. There's no real major abnormal action here. Nothing's acting crazy or completely abnormal. But just no real traction yet. And again, you see this list here, we don't have a very big list. And even you have to also grade the quality of the list. Like you look at your list, are there a lot of setups that are really nice, crisp setups that are well defined, and the breakouts are working? Just by that alone, I know sort of the health of the market. If there's not a whole lot of setups, that tells me right there it's a market I don't want to get too aggressive in. I think Scott Sinclair is coming on. Yep. So he should be coming on pretty soon here. What time is it? It's 11:10.
Hi, good morning, and Mark, how are you?
I'm good. I'm great. How are you?
Good, good. Thank you. I wasn't sure what time you want me to join, so I will just stay in the background and listen, and you just yell at me if you need me.
You can come on right now if you want. I don't know if you want to share your camera or not. We're on here. It's up to you.
Yeah, I can.
Awesome. Great to see you, Scott. Scott, obviously, as you guys know, if you don't know, he's with IBD and with Market Smith, a friend of mine and a friend of ours, a great guy, Scott, and very knowledgeable. Has been doing this for a long, long time, knows the products inside out. Thank